Let's stick with Bitcoin here, though. Joining us now is Joe Grunfest. He's a professor at Stanford Law School and a former SEC commissioner. Professor, good to have you here with us. What role, just from a big picture perspective, what role does the SEC and other regulators have in this market when Bitcoin, we can't even necessarily define it as a security? These initial coin offerings, not all of them purport to be ownership stakes in companies. So where does a regulator start?
It's a great question, and the answer is really quite complicated. There are many financial instruments that are involved over here. Bob was just talking about the situation involving the futures on Bitcoin. Clearly, the futures on Bitcoin are going to be regulated by the CFTC. Bitcoin itself is a different story. You've got Bitcoin, which in effect is trading on a peer-to-peer exchange. That, at a certain level, is beyond the regulatory reach of just about any regulatory agency in the world. On the other hand, you have these intermediaries that sit between investors in Bitcoin and the actual Bitcoin market itself, and that's an area that's still open to discussion in terms of whether Bitcoin will at one point be considered a security, will it just be considered a commodity, who is going to regulate it, and the other possibility is that different countries will take different approaches to the regulation of these intermediaries as well.
Professor Grunfest, I wonder if the regulation piece of this is making sort of people out there think that it may be actually safer to buy Bitcoin or trade in it or do whatever they want with it because the regulators are coming in when, as Bob Pisani was just telling us, it's still very, very unclear as to what's even going to happen next week when you can suddenly trade futures.
Yeah, from my perspective, we're still in the Wild West phase over here. And the technology is several steps ahead of where the regulatory infrastructure is. I'm not entirely persuaded that all of the regulators really understand everything that's happening in this market. We're about to embark on a very remarkable experiment beginning next week with the trading of the futures. There are many, many questions about how this trading is going to occur. Who's going to step into this market? Who's going to want to short it? Who's going to want to go long? Futures markets are naturally zero-sum processes. Where are the natural longs? Where are the natural shorts? With this level of volatility in the market, how quickly are the limits going to be hit? And as Mr. Pisani pointed out, there are questions with regard to financial stability of many of these clearing exchanges. And you've got many large financial institutions that don't want to have anything to do with Bitcoin. But now, as a practical matter, they're going to have Bitcoin exposure because of the introduction of these futures markets on Bitcoin.
Even as we're talking, Professor, Bitcoin on Coinbase is now below 17K, which is obviously a dramatic drop even from a few moments ago. Do you think the exchanges that are introducing futures are doing it too soon? What's the rush?
Well, everybody involved in these markets is involved for one reason, and it's not complicated. It's to make money. And we know as a practical matter, the way futures markets operate, there tends to be one dominant market for each underlying. And here we've got competition among the various futures markets to try to own the futures markets in Bitcoin. And you can therefore imagine various forms of races trying to become the dominant market. And different markets are willing to take different levels of risk in order to try to become the dominant market for Bitcoin futures.
Now, when it comes to these initial coin offerings, obviously a lot of opportunists out there either creating their own kind of bespoke coins or just essentially trying to rebrand themselves as a blockchain or Bitcoin play. Is that an area that the SEC or other regulators should become more active in right now? Or is it just, hey, it's buyer beware, this is just like Beanie Babies?
Well, number one, it's not just like Beanie Babies. Number two, let's remember what happened with Beanie Babies. A lot of people lost money over there. Number three, this is a more straightforward situation. A very, very large percentage of these initial coin offerings fall squarely within the traditional definition of what a security is. These coin offerings are not registered with the SEC. As a legal matter, they're required to be registered with the SEC. And the interesting question from my perspective is, what's taking the Securities and Exchange Commission so long in terms of initiating actions to shut down many of these ICOs, many of which are pretty blatant frauds?